So welcome back. This is part 2 of today's weekend video review. Today is April the 15th, 2018. It's 11:30 p.m. EST time in Toronto, and this video is part of the FibStalker analysis and trading service. Now, as usual, I ask you to review and accept the usual disclaimer if you have not done that yet, and you can pause it here and read the disclaimer here. All right, so let's continue here with part 2 of the analysis, and there are a number of other markets that we follow, and the analysis of this market is more or less we go more or less in depth depending on what's going on. Starting from Australian dollar, US dollar, Canadian dollar here, we see a range in this market, and the you can see this on the weekly time frame clearly in here, and now this market has broken the 50% long. We were not anticipating that to actually trade, and it has not traded. So for me, if we get profit taking here from shorts, we're going to look at a reaction up to 98, 97, but this market could start reversing well before, and but the weekly, that's the level that the weekly is suggesting here, and that's the 98, 97. Okay, Canadian dollar, Japanese yen, it's actually very interesting, more interesting market here, and this market has traded shorts very clearly here, the 50% shorts from highs to lows, and that participation actually at that 90.72 came twice and was capable of pushing price down into the 50% long. So far we've seen this market moving higher. The sequence of measured move here has now failed. This market traded the 50%, the 83.54 went into the first and second target, and the next measured move has failed here, as you can see. So this is a busted setup, and this market could come down to trade into the larger weekly extension along here. So what I'm looking for in this market is a potential test of the 84.28 level here. Okay, so if that happens, that's what we want to look at for what? For a continuation higher. This is a range. There is a clear 50% as traded here, and my anticipation is a continuation higher into 90.70 area again. Okay, Australian dollar, US dollar, sorry, Australian dollar, Australian dollar, Euro dollar, Australian dollar. This market has actually traded this big range here, and it went to trade into the previous size. Okay, now this market has been very technical on the larger time frame. We had lows to highs, 50% has traded, bringing price into the first target and almost into that second target, but that never traded. In any case, we can trade aggressive move here, and that's the level that we're going to test for participation. So there's nothing to do here in this market until it gets into the 157.10, and then we're going to test this level for a potential continuation higher. The euro pound has been a very painful market for many weeks here. We knew that the sequence of measured move here had failed, and there was all this move higher, and this market actually started moving lower here. At some point went to trade the 50% short. That's the 90.20 22 that you see on that on this chart. This is a smart money level. Algorithms have participated, and as soon as they participated, there was a first target 86 12. However, due to the presence of dump money here, which kept buying this price because they saw this move higher here, not knowing that the smart money and the algorithms were not supporting this long anymore. In fact, look at what happened here. Dump money is still trying to buy this price, but smart money. So dump money tries to buy this market, but smart money decided to commit to shorts here, and so dump money has been tried to trade this market higher until they gave up, and now this market can move in the direction of smart money, which is actually 86.12 that we're probably going to hit this week. Okay, so after that there are two scenarios for this market. Either this market continues lower and we might be able to catch a measure move in the smaller time frame, but if that happens, then you're going to trace from lows to lows. Or after it actually trades the first target, we're going to see profit taking and a continuation in the next measure move. Okay, so this is a heads up for this market development going forward. The euro, Canadian dollar, it's a short too, and this market has clearly violated the sequence of measured move within a large range. The sequence was this one, 50% as traded last July and October. I remember trading this in Quebec City, and the first target was it, but also the second target just above price was it, and the next measure move failed. So we know that smart money is not supporting longs here. Okay, in fact they are supporting shorts and will be supporting shorts. Okay, so this market has the potential to move now as soon as this small correction higher ends, and it could continue for a few days here, but when that ends, the high probability trade here is a continuation lower into 150, 149.60. Okay, so that's what we should see in this market, because of how smart money and dump money are, smart money particularly, are positioned in this market. Okay, so when we look at the daily here, I made a case for an extension short that has traded, and at the end of the week last week has brought price into the first target. I made a case for this short here into the first target. So let me remove the other level here, and now we are seeing profit taking. So if this profit taking is strong enough, it could bring price to trade the next measure move. Okay, a retrace of 90% of the of last week's move here, but that will give us the next short. So the next short could come up to the 156.87. This market could reverse before, but if there's a strong profit taking, that's where we could see this market moving to. Okay, so very, very important, very good opportunities there. Euro, Japanese yen, this market has continued higher here. There was an extension from previous highs end of 2016 to highs that has not held, but we have used the low of the gap here to model this price initially, and once we saw that this market was trading in jumping extension, then the next level we can see that was the jumping extension here, and that's, we could only identify this after the fact, while most of the levels, the other levels that I've showed you, can be identified well before the fact by applying rules. This level here was not possible, and there is a reason for this, because this market has not been particularly technical in the last few months in here, so it's not something we can really trust. The bears have not held here, the bulls have not held in the past, so we know this market is not really a technical market. Okay, but nevertheless we can do some considerations, and I'm not going to spend a lot of time on this. I don't spend a lot of time on markets that are not behaving technically. Okay, that market is not as technical as others is the Euro New Zealand dollar, which has been moving in this lateral move here on the weekly now since basically the beginning of the year. Okay, bears are not holding, bulls are not holding, and this market though has failed also, like the Euro Canadian dollar, it has failed the extension long here, which means that because this is a large trend, there's a possibility for this market to move lower. The point is that we need a clean setup in order to do that, okay? Because we do not sell lows. And in here there was a setup which is similar to the setup that I showed to you for the Euro Canadian dollar. It's an extension short traded and brought pricing to that first target. So like for the Euro Canadian, there are two levels, either the 50% that's already traded last week, or if we get a deep retrace, that's going to be a 90% or 80% retrace of the previous move. And so the level you want to watch is the 168.39 short this week. All right. Pound versus Australian dollar, because the pound has been very strong, this market has continued higher strongly in the last few weeks, moving laterally. And if he has another push higher, that's the level we're going to see, the 190, that's the level we're going to see. Okay, but recently what happened here is that this market has started moving laterally. It went when we look at the sequence here, the extension long has traded once, twice, three times, solid level, clear level of support, and the next measured move has failed here. Initially has held, and then it has clearly failed. Okay, so this market is moving laterally between an area of support that has failed and an area of resistance that has failed too. Okay, so like some other markets, many other markets we are seeing, this market is actually in a sideways move here, which can be either a continuation move or a reversal move. We don't know that. There are other markets that are much easier to trade at the moment, so that's not something that we would look at. The pound versus New Zealand dollar here has traded an extension long on the weekly time frame. This extension long is still targets above. This market has been moving, pretty much laterally here with on the weekly time frame with a long bias. So not really a lot to do in this market. The pound versus Canadian dollar is a very interesting market because it's showing the same pattern, and this is the weekly time frame that we are seeing in other markets. The extension long traded at the beginning of the year and brought price very quickly, relatively quickly, into that first target and second target. Now the difference here, and the next measured move is going to be high to high here, and we could make the case that this has been pierced. Now the important this is a very important development for this market because this violation of the weekly move higher here has not happened at a random level, but it has happened at a 50% level short. Okay, that's the 150 83.76 level. Okay, which means that bears on the weekly time frame now are in control. In any rallies of this market, there are going to be opportunity to sell, and this market could move down very strongly. In fact, it has a lot of way to go here. Okay, so now we are seeing this reaction. When this reaction ends, this is going to be a great opportunity for a short. Okay, and the assumption here, which is not really an assumption because it's an objective observation, is that the 178.26 has been pierced on the downside, right? And therefore it means that the bulls are not supporting this price, and bears clearly are supporting the short scenario here. So we don't know where this market is going to move, but as soon as this move higher here loses its energy here, and this market is going to reverse. In fact, I'm going to place on the chart 50% short. If this market actually starts slowing down around this area and actually is not capable of moving above this area, then this is the first level that we're going to consider for a reversal. If it continues higher, the second level is going to be the second test of the third test, actually, because the first test came here, the second test came here. It's going to be a third test of a level that could be a very solid level. Okay, the reason why it's a very solid level, because the participation short that came here was strong enough to break the back of the bulls, as we saw before. Okay, very, very important, very interesting market to follow. I think it's gonna offer us opportunities for shorts. Pound versus Japanese yen, following up on the strength of the pound, this market, which has been pretty technical on the larger time frames here, lows to highs, 50% traded in here, the 136.62, first target hit, the next measure move on the weekly as played as well, and there's the potential to bring price into 161.448. All right, so what we saw on the weekly, on the daily time frame here, it's basically an extension trading, highs to highs here. This has not held, but nevertheless has pushed price higher. Market could come back, it's very extended here, it could come back to trade an extension long. So if that happens, the 152.23 is going to be the level that we have to watch for a continuation higher. New Zealand dollar, Canadian dollar is also showing that same pattern of an extension long under pressure. So far this area has held. We're going to see whether it's going to hold and actually keep pushing this price higher. But if the New Zealand dollar reverses, I'm afraid this level 2 is going to be pierced, and that would start, a reversion here into the bottom of this range here. Okay, so that's what we have to look for in this market. The other markets that I want to comment on are Australian dollar, Swiss franc. This market is also in a range here and is now challenging 50% that came into play before. Now in a range, 50% rarely hold, and we saw this holding last week, but is being under pressure again for the second time. So this market could actually just continue higher. And the daily time frame, we have a 50% long here, and so we have a clear sequence that it's developing here. And look at the beauty of how these levels are respected times to the pip. So we have the 50% here trading, the 73.39 first target, second target. Now the next measured move, well before the fact, is highs to highs that has traded here at the open. So we were a little bit late here, but the highs to highs clearly found participation. Is this level is retested during the week. So I'm gonna put this level on the 4-hour time frame here. Highs to highs is something to keep an eye on. If it's retested successfully, the 74.65 holds, that's an opportunity for a continuation higher against this 50% short. All right, Australian dollar, Japanese yen, similar situation here in a market that differently from others that have a solid 50% below. This market has been trading the basically the low of the range here. okay, and the only other level that we can consider is this 50% here that barely came into play in the past, and now it's actually in play. So because of this, the path of least resistance here is a retest of the upper boundary of this range. Okay, so this is an interesting market to follow on the long side, and like other markets, it has supporting 50% long or extensions. In this case, we cannot see the extension on the daily time frame, so we can only see that on the 4-hour time frame here. And the extension at the supporting price is the highs to highs here, and that has brought price into first and second target, and therefore we're going to look at highs to highs that has already traded on Friday and confirmed today, and actually price is still hovering around that level. So if this holds, it's going to be a long for this week into a continuation higher in that range. Australian New Zealand dollar has been a very technical market that has failed this sequence of measured moves, and then it has actually started a sequence of measured move lower, traded a 50% short, brought price that short to the pip, brought price to the first and second target. Look at the profit taking here. And if this market is now continuing the profit taking at the second target, then this is the next measure move short. So we're gonna intercept price around the 106.66 area. That's what we would want to see this price move into for a continuation lower. Okay, when we trace that on the daily, the level we are looking for is an extension short from lows to lows. That's the level, to 106.66. That's the level we want to look at. Canadian versus Swiss franc. The Swiss franc has been particularly weak here, and the Canadian Swiss franc is now traded at 50% short. This the Canadian has been strong, of course, and again there was an extension here. We considered the extension here pierced, but nevertheless the market continued higher. So the next measure move we can trace is the 76.17. If the market gets there and finds participation, we could see this market continuing higher into the upper bound of this sideways action. Similar situation here for the Euro Swiss franc, which is much stronger, and on the weekly we actually had this sequence, this extension long from previous highs to highs that has held, and that's what's actually propelling this market higher. And the first target lines up with the closure of that gap that was caused by the decision of the Swiss Central Bank at the beginning of 2015. And that's why we're seeing this market move into potential retrace in case there is profit taking here. For a continuation, is going to be highs to highs. As you can see, that has not traded on Friday, not traded today. If the market gets back to that level, that's something you want to look at. The weekly here for the pound versus Swiss franc, it's very close to trading that first target of the of this traditional measure move that traded back in here in March, 128.57. The first target 137.88 is very close. That's almost 1000 pips, 900 pips. And look at the pace of this move and the pace of this move. Clearly the pace of this move is stronger, which suggests that this market could even continue higher into the 142.72 level. Okay, now if there is a retrace here, the daily should suggest as potential retraces. The 133.62 as traded, we identified this after the fact, not before the fact, but after the fact. And the next measure move traded last week, and this market is now into the second target of that measure move. So we actually can trace the next measure move that came into play already at the beginning of the week here. Okay, we can follow all the markets, of course. So and I tend to focus my trading on the majors when there are opportunities there. When there are no opportunities there, then I move to other markets. The $1 Swiss franc, similar situation here. Market in a range on a larger time frame. The 50% short here, long, has not been cleaned, but nevertheless pro-pricing to the first target. If we get profit taking from longs, the next level we want to watch this week is going to be the 70.36 for a continuation higher. Okay, so that's the 79.54, which is this level here, the high that we see here, the relative high swing high that we see here on the daily to new high, and we're just applying rules. 70.37, it's where we could see this market moving to. And the last market of this weekly review here for us is going to be the New Zealand dollar, Japanese yen, and this market has traded a 50% long, which also identified the bottom of this range here. And as you can see, every time this market came into this bottom of the range, this 50%, 76.40, we found participation. So this is a very strong level. Okay, the and this market on a very large time frame, it's in a range bound. As you can see, in a range, 50% do not hold. And so what we can anticipate in this market is a continuation at least at the closer boundary here, but this market could continue even higher. So what is important here is to identify setups longs, because this market is the path of least resistance for this market is long. Okay, so when we look at the last measure move here, that was the 77.68. The following measure move, highs to highs, has failed, making price anyway into that first target. And if we get some profit taken from longs here, this market could move into the highs to highs, and that's where, if the market tests the 78.37, this could be the magic level here where to pick longs for a continuation higher. All right, so this is it for this weekend review. As usual, we will post charts in the room. We'll have discussions with all the other traders, Pantelis, Crossroad, Craig, Diego, Matteo, and everybody else. And so join us, have questions on the opportunities, and we will continue with opportunities every day. Then I'll also publish an intraday video of update, and we'll focus on the smaller time frames and the opportunity on the smaller time frame. Okay, thank you very much, and have a great trading week. Bye bye now.